What's going on, everybody? Scott Riddick here, your local real estate agent with Berkshire Hathaway Home Services. Today's video is going to be about 8 steps every first-time home buyer should follow when purchasing their first property. Now, this video is pretty long, so let's just get on right to it. Number one we're going to be talking about is paying down your debt. You want to get slow as possible. Now, it doesn't have to be absolutely zero, but the lower it is, the better rates you will get when applying for a mortgage. Now, you also want to make sure that you're on top of your credit card bills, paying them on time, as well as other utility bills. And when it comes to time to purchasing your home, make sure you're not making any unnecessary purchases on furniture or vehicles or anything that's going to, put you in the payment plan. So you want to avoid all things like that. Next one, number 2, we talk about is know your home buying budget. So you want to lay out your income and know what you can afford with type of house. And if it matches what you're desiring, then you can move forward and start getting pre-approved. And once you get pre-approved, that will let the seller know that you're ready to buy and the lender has your back and you're good to go. Number 3, we'll be talking about is learning the home buying process. It is a lengthy process, but there's really not that much involved. Like I said before, you start off with the pre-approval process, and then after that, you're ready to start looking in the market for a home that you like. And then once you find a home, you make an offer, and once it gets accepted, then we move to securing the mortgage. And once that's secured, then we move on to home inspection and appraisal to make sure everything checks out, everything's good to go. And then lastly is just mortgage underwriting and the closing. So that takes a little while depending on the process, like a month or so. So after that, that's it, you're ready and you're a homeowner. So next one, number 4, we're talking about is have money in your bank. So typically you want to put 20% down. That's what the experts recommend, so you can avoid the PMI, it's private mortgage insurance, that you will have to pay in case you default. It protects the lender. And if you can't afford that, there is also other government-backed loans that you can apply for that have lower down payments and waive closing fees and things like that. So those are things you can look into, because I know 20% is a lot for first-time home buyers. Number 5 is budget for expense beyond your mortgage. So once you get in the home and you finally own it, the payments on the mortgage isn't the only thing you're going to be paying for. There's going to be HOA fees, there's going to be taxes, and then if you have a larger home, there's going to be more utility costs associated with it. And if you have any amenities like a large yard or a pool, that's going to cost you a lot as well. So definitely keep those things in mind. Now we're going to move on to number 6, and that's decide what type of mortgage is right for you. Like we talked about before, you got the government-backed ones, which is like FHA, Federal Housing Administrator, and then you got the VA ones. And like I said, this will have typically a higher interest rate compared to the conventional ones. The conventional mortgages, you will have fixed rate ones and adjustable rate mortgage. Or adjustable rate mortgage stands for an ARM, and that basically means it fluctuates over the life of the loan, and you can move it around, but there is a limit to how much you can change it. So if you're not going to be in your home for long, maybe that is the best route to go. But if you are planning to stay in that home for a while, most people choose the fixed rate because it is predictable and the rate will always stay the same. Number 7, this segue into the length of the loan. You want to find out if you want to do a 15-year one or a 30-year one. So break apart the differences. Basically, the 15-year one, you're going to have a little bit lower interest rates, but since you're paying the house off in half the time, the payments will be a lot more. So if you're planning on being there for a while, it's mostly recommended to do the 30-year rate, simply because it's the most affordable one. And that brings us to our last one, which is number 8, and that's start gathering paperwork. You want to get it ready before the pre-approval process. Find out everything you need. Typically it's going to be things like tax returns for the last couple of years. It's going to be pay stubs from your work to show that you're bringing in income, and if you had any rent from or utility costs from the last place, they might ask for that. If you had any outstanding debt on credit cards, they want to see those statements, and student loans as well. So you gotta get all those statements ready, because there are a lot of documents needed for the mortgage process, and you don't want to be stuck and scrambling. That way, when you plan ahead and you're prepared, the less hassle it will be. And you don't want to have a hassle when you're buying your first property. You want it to be as smooth as possible. So that's it. That's my list. Hope everyone learned something. Please comment down below what you like, what you didn't like. I'll be uploading more content like this in the future. I'll try to stay consistent every week or so. Please like and subscribe if you want to see more stuff like this. And if you have any questions about real estate, or if you're looking to buy or sell, you need help, I'd love to assist you. So thanks again for watching. Appreciate it. Y'all have a good night.